Okay, this is the beginning of week 9, or we're halfway through week 9 at this point. There will be an announcement going out later this afternoon with all of the lecture notes from chapters 11 and 12, and some other links that I think may be of importance when you're looking at employment and wages. A lot of the numbers are pre-COVID, so I did go to the BLS, the Bureau of Labor Statistics, and pull up the information with COVID, and it breaks it down by the months. So April, May, June, July, August, etc. So they had the monthly information. But first thing I want to do is, just like we talked about at the beginning of the previous class, I want to make sure everybody understands what's going on in the end of this week and the beginning of next week. I'm going to share a screen with you. The screen, it shows, the first thing is the schedule for the entire semester. Currently, we're in week 9. In week 10, we'll see test 2. Test 2 will cover chapters 7, 8, 9, 10, 11, and 12. It is not comprehensive, so it's not going back before test 1. All we're testing on now is the material from chapter 7 to chapter 12. In addition to that, you'll have a peer review that has to take place. There will be instructions sent out at the end of this week. There'll be discussion boards opened up for you to post your, at least a minimum, 1 page of your paper. What you think is something you would submit to me as the instructor. So I don't want it to be a rough draft, because the objective here is to find, errors in grammar, spelling, word choice, etc., and formatting. Make sure everything is MLA formatted correctly. And your peers will be doing that for you. They're going to, everybody is going to be responsible for reading at least 3 other papers. And I don't want any paper to get beyond 5 reviews. So once you submit your paper, I want you to read and make suggestions, critique the paper that you're reading. You don't have to be cruel. Just be mindful of, it's everybody's going to see what you write. So be kind. If I see some issues that are major, I will send a private message to the individual notation. Okay? Something just happened. I don't know what it was. Everybody still here?
Yes, sir.
Okay. I saw some things move around. I didn't know if I lost you or not. So we need to get prepared for week 10. I'm going to open up all the materials from chapter 7 to chapter 12. They're going to be open until the middle of week 10. And like I said, there'll be additional instructions that you'll see in announcements about what the process requires you to do for the peer review. Okay? Like I said, I'll pull up some other sources, and I'm going to post those this afternoon dealing with incomes and employment. I want you to, if you're not sure what's going on, go to the policy analysis documents. This is in student view, so this is what you will see. There's some final paper assistance, these are some examples. Like one of these So you can see this is a paper that was submitted by a student probably back in 2015, 2016. And they were dealing with college tuition. You can see the formatting is correct. This is incorrect at the top. It should be well, it was their last name. I just abbreviated it because I abbreviated their name. But you'll see the in-text citations. You'll be able to read the processes they went through. This one is a little, well, about right. This is the works cited page, and this is in a proper format as well. For the peer review, I do not need your works cited page. But if there are any in-text citations required on that first page, as we see on this paper, I want to see them properly identified. Anytime I see something like this, where it gives me the actual numbers, the current average tuition private colleges is $32,405 in-state, and then state public. Anytime I see numbers like this, or there's in analysis, quantitative analysis, I know this individual did not go out and survey all the private schools, all the public schools, and all the out-of-state public schools. They didn't do it. So they have to give them credit. So when I see something like this and I don't see an in-text citation, I have a problem. Unless you went through and did all the research, you got to give them credit, because this paper doesn't give you the time to do that amount of research or in-depth research. So just give them credit. That's all I ask. So when the person's doing a peer review, that's what they're going to be looking for: format, grammar, punctuation, spelling, proper use of words. Because sometimes the word is not picked up by spell check, but it is the wrong word. Looking for tense, don't want any first person. So this is where we're going when we go to the peer review. Like I said, there's examples and there's some areas you can go. You go to Purdue Owl Writing Center. They gave the new link to the writing lab. They can do a lot of, they've got a lot of materials here, especially if you're doing research. So just take your time. The materials are there. And if nothing else, I'll explain it again, or if you have questions, I'll answer your questions. But this is just a part of the process. We started with a thesis and outline. Now we're looking at the peer review, and the final paper will be submitted week 14. So between 11:09 and 11:15, they will be submitted for final grading. Okay. Any questions about the paper or the process? Okay. Let me get back to it. Okay. In chapter 12, we're going to look at the U.S. tax system. And when we look at the U.S. U.S. tax system, we have a progressive tax system. We do have deductions that can be taken. We also have subsidies that can be taken, like the mohair subsidy. If you want to get involved with that, there's mohair. There's a bee subsidy. With the bee subsidy, you get a tax write-off for having beehives on your property. There are a lot of individuals that are not even farmers. They have a large amount of land. They will have beehives there just so they can get the tax write-off. Now, it benefits all the farmers around them, but they will get the tax write-off. So the U.S. tax system is complex. It changes constantly. If you've watched the debates so far, I didn't gain a whole lot from the first presidential debate from either candidate, but I think we'll see a little more detail of what the tax proposals are for each candidate at vice president tonight. Maybe some future debates we'll see a little more detail. But when we looked at the Laffer curve, we couldn't determine left or right or whatever, but we knew the Laffer curve exists. And dealing with taxes, one side thinks we're taxed too much, one thinks we're not taxed enough. That's what we'll be voting on November 3rd, is how we perceive our existing. Now, in this chapter, what are the largest sources of tax revenues in the U.S.? What are the efficiency costs of taxes? How can we evaluate the equity of tax system? Now, we talked about this when we looked at tariffs and quotas, and when we looked at the four types of goods last class period. The four types of goods last class period, we did have a section where we looked at, and it said government can have an impact on outcomes. And by taxing, they can do the same thing. If we can improve outcomes, or we can perceive we impact outcomes, by providing public goods, regulating the common resources, and trying to remedy externalities like pollution and other different types of negative externalities. Or they can use it to support positive externalities, like with the beehives. If you get a subsidy for beehives, it doesn't help just you on your property, because you can't put a fence up to contain your bees. They travel. And everyone around you, if they're growing strawberries or anything like that, in flowering type plants, they will benefit from the beehives that you get the subsidies on. Now, the government can raise revenues through taxations, but again, that's based on which side of the Laffer curve you believe we're on. And the government can perform many functions with those revenues. A tax on good reduces the market quantity of the good. If it is applied on the supplier, let's say Exxon, they raise the corporate tax on Exxon. Their primary product they produce is gasoline and oil. You will see an immediate impact on the price of gas per gallon at the pump. Because the curve for gasoline is inelastic in nature, any tax being placed directly on a corporation, either through value added or just the corporate tax in general, it's going to be it's going to pass on directly to the consumer. The slope of the curve will determine the impact or the burden the consumer will have to pay. Now, if we have perfectly linear slopes and their slope, one is the inverse of the other. Say the slope is 2 on supply, it's -2 on demand, then it would be an equal distribution of the burden. Very few markets have that type of situation. Table salt, if they apply a tax to table salt or the production of salt, that's going to be passed directly on to you as the consumer. Because we don't pay attention to the price of salt. We know when we need it and we buy it. It's on the bottom shelf, we grab it and we go. Now, we talked about this on several occasions and we looked at it back in chapter 8, I believe. When taxes are applied, regardless if it's on the supplier or the consumer, there's going to be deadweight loss. If it's applied on a consumer, you'll have a group of consumers that exit the marketplace. They say, I'm not going to participate in this process because the price is too high. But if, on the other hand, if the price is too low, the seller is saying, I don't care how many you want at that lower price, you will get X. So either way, we look at the law of short side domination. The first curve intercepted by the price level will dominate. And in doing so, it is a market failure and there are deadweight losses. Now, taxes can increase efficiency when they are used to internalize externalities, thereby correcting market failures. Yeah, there's not enough bees out there. Beekeepers are, it's hard to find one that hasn't already set up their hives, and there's so many factors involved. The government comes in and says, okay, we'll give you a subsidy if you place those hives on your property. So they can help motivate individuals to close those or advance the positive externalities or eliminate the negative externalities. Now, if we look at this graph, it goes to 2017. I would hope to have gone a little further. We can see revenue as percentage of GDP. Our revenue as percentage of GDP is just a little over 16 to 17%. But when we add the local in the state, we look at about 25 to 28% of our income goes to the federal, state, and local governments. If you're in a state or a community that has very high state or local taxes, this can get even greater. New York taxes are much higher than what we have in North Carolina as far as state taxes. The fees and taxes that you pay on your property to your local governments, your county governments, or city governments is lower in North Carolina than it is up in New York City. So if you're in New York City and you're in New York, you're probably paying between 35 and 40% of your income into the tax coffers. Now, the U.S. tax system revenue has increased as a percentage of total income or as a part of GDP because more and more services are being offered by the federal, state, and local governments. Our income has grown. So with our income growing and available additional tax revenues, the government has grown as well. In 1902, it says here, the federal tax, the tax revenues were 7% of income. Now it's 30%. And we have to determine what is acceptable. What are we willing to pay? Now, if we're Bill Gates, we don't care. Jeff Bezos, he doesn't care. He's writing them off. It's just a drop in the bucket. So the people that hurt the most are the ones that can't afford it. Government revenue as percentage of GDP is a comparisons. If you, when I've had classes, CD classes, and we talked about the introduction of democratic socialism and other discussions about extremely progressive ideals. And the reference is always, well, you got to look at Denmark and Sweden. But in Denmark and Sweden, nearly half your income goes to taxes. Now, the individuals, when we look at the healthcare debate, nationalized healthcare debates, and other things, if the government's going to be responsible for them, they have to gain the revenue to pay for them. And that's what you see in Denmark, France, Sweden, and Greece. The majority of the population in Greece are government employees. So it's a difficult situation when you have services demanded that require this type of tax burden. Now you can see U.S., we're around where Turkey and South Korea, Australia, we're in that same area. Mexico is much lower. Chile is just 5% behind us. This is its percentage of GDP. The receipts of federal government 2019 quarter one, the amount of taxes in billions, personal current taxes, that's $1.66 trillion per person is an average of 5,079, and percent of receipts is 46.7% of the population. Social Security, there's your payments going in there. Now you've got to include, when you look at these, with the personal taxes, when you're looking at federal, state, and local taxes, the government, the company is also matching those. So there's actually, that's included in here as well. Corporate taxes, 1.59 billion, others is 3.61, and Social Security. So this is the amount total that's received in revenue based on the taxes we currently have. Here's the amount per person, it's about 10,879. And it represents 100% of the revenue. You can see that the corporate tax income is only 4.5% of the income of the federal government. But you cannot forget that if we have a corporation that employs 1 million workers, they also match their income taxes and Social Security taxes as well. So the employee is only paying half of the liability. The business is covering the other half. So they are contributing to the coffers of the federal, state, and local governments by employing individuals and paying salaries. You see a lot of communities, Johnson County, Wake County, they all want to give tax breaks to businesses coming in. And what they look at is the number of employees that they need to retain to operate their business. So they look at that as a positive gain, Because if they're employed in Johnson County, they're probably going to buy a house in Johnson County. They're going to buy a car. They're going to drive on Johnson County roads. They're going to pay property taxes to Johnson County. They're going to pay city taxes if they're in Clayton or Smithfield or wherever they may reside. So we can't forget the contributions that businesses make just on employing the individuals. And what happens to the pay rates as more and more individuals are hired in that community. So when we look at this number right here, we can't just assume that that's all that is paid in by the companies, because they are matching these income taxes. This is a federal tax system. We'll see what date I have there. They don't show the date. I haven't looked this up, see if it's been revised. This does look like the revised version. 10% if you make between $9,700 and $10,000. 0 and 9,700, you pay 10%. Now, if you're making, we have to look at marginal. So what happens if we're looking at the marginal, and let's say your income is here. Let's say it's 204,000. So the difference between 160,726 and 204 will be taxed at 32%. But your first 97 is here, is plus 10% in that area, plus 12 in that area, plus 22% in that area, and 24% in this grouping. And then the sum will be here. This will be the sum of the taxes that are paid. Now, your marginal tax rate and your actual tax rate percentages could be different. Because if you're just at 161,000, you only have a small percentage that's taxed at 32%. Then you just add the taxes for each one of these areas. Okay? So you'll pay 10% for the first 9,700, 12 for 9,701 to 39,475, et cetera, et cetera. In this example, Kayla's earned 49,000 and Malik earned 39,000 in income. Based on the federal income tax rates of 2019, calculate their liability. And all they're doing is they're just going through these individual processes here, just like I mentioned on that matrix. You got 12% difference here, 22% of the difference here. So that'll say the tax is 970 plus 35 there, and this will be the total tax that Kayla will have to pay. Because all we're doing is just adding those different points. This is easy. If you make over $10,000, you know the first amount is 970. But now they have raised the standard deduction. I think the standard deduction now is around 12,000. I know on married filing joint it was 24,000. In the past, if you wanted to get a number like that, you had to itemize everything. If you ran a business out of the house or service out of the house, I mean, you had to deduct everything to overcome the tax burden and the standard deduction. But now with 24,500, I mean, it's easier to just do the simple form than to go through that process, because it is very difficult to overcome that 24,000 standard deduction. Okay. Now Malik, we're looking at Malik. Malik's going to deal with Still got the 970 down here. Then 12% of 39 minus 9,700. So that's there, and 44.86 tax burden. And for an individual, you would see probably a zero liability on both of these parties based on the income that they have and that they use just the standard deductions. Now, when we look at receipts of state and local governments as far as taxes are concerned, the majority of the taxes that are received by the state governments are sales taxes. Now, they have property taxes. A lot of that is in the local area. Johnson County generates their revenue through property taxes. That's their main source, and their main spending item is education. The sales tax generates 427, which is 16% of the total. Personal income taxes, that's 453. Excise taxes, 197. Corporate income tax, 65.1. And a lot of that will be part of the personal income taxes. The federal government chips in another 578 billion to the states. And you see the total receipts are 100%. Amount per person is around 8,059.79. Now, this area right here, where it comes from the federal government, remember, you pay taxes to the federal government, and well, not the other, that's not what I want to say. I'm going to point to this one. You're liable for those funds as well. Now, if you're in a state where there's a large demand for federal government grants and services, and their population may not pay enough in to cover what they get back. But there's other states that, yeah, they get the money, but it's a whole lot less than what they paid out, so they're net positive. Every state is different. We have some states that are fiscally responsible. North Carolina is. We have a balanced budget amount. That means if we have a budget of $2 billion, we better have $2 billion coming in. Federal government doesn't have it, and a lot of states don't have it. Now, the policymakers' objectives. Equity and efficiency. Equity is very subjective. Efficiency, it has to be measured. That can be quantifiable to see how much that money that is spent improves the quality of life or improves the process in general. Equity is tough. There's nothing that's free. Never. In a lot of the debates, there's discussions about Medicare for all, which is basically creating a national healthcare system. And people say, well, it's free. Well, it's not. Somebody has to pay for it. There's a cost to it. And if the cost is too high, they have to become more efficient in how they deliver the services. So you may not receive the same level of service you received in the past. Because if they have to control the dollars and cents, they have to make some concessions. And a lot of times they're painful, no pun intended. The cost of taxes to taxpayers, we have to pay for it. Somebody does. And there's always a dead weight loss. Because people and businesses will change how they deliver or how many units they'll deliver to the marketplace. Price is too high, consumers walk away. Price is too low, the suppliers walk away. So there's always going to be some deadweight loss. And we have administrative burdens. The taxpayers bear as pay their taxes. It doesn't matter if your income is less than $9,700 a month, you still pay for your gas taxes, your sales taxes, etc. So there's always a tax burden. Now, with the earned income credit, you get a lot of that back if you're earning $9,700. But there's always going to be some form of burden. They talk about needing to raise, well, they raise the prices, the taxes on cigarettes to prevent or to encourage people not to smoke, making it, you pay a price to consume. We have a lot of sin taxes, alcohol and other things as well. But cigarettes, they use the tax policy to eliminate or try to stop people from smoking. And when you look at the taxes, they have to collect them, they have to process them. And then when the money's going back out, say with social services, you got the entire departments, they'll spend $1 billion to save a penny. So there's an extreme tax burden in the administration of either receiving the funds or distributing the funds back out to whatever projects or policies that are created by the federal government or legislation. We respond to incentives. Now, the taxes kind of distort the incentives. If they get, like the mohair subsidy. Do we need more mohair? I don't know. Till 20, 30 years ago, didn't even care what it was. So it kind of distorts the incentives. There's a corn subsidy. Farmers will plant a whole lot of corn when they know they get an exact rate or a subsidy instead of the market price. Either way, we end up with either too much or too little. And there's always going to be some deadweight loss. Because anytime the government gets involved, whether the price is above or below equilibrium, there's a market failure and there's deadweight loss. So when we look at the taxes, in relation to other countries around the world, we're not taxed as much as a lot of the countries in the EU. And the more services you want to offer, the more you're going to have to charge. Now, Canada is at 32%, and they have a nationalized healthcare system, but they are very strict on their controls of delivery of healthcare. And if you need a hip replacement, you're going to wait in queue for a good while. Now, in the United Kingdom, if you have enough money, you can buy the doctors out of queue. But anytime, the more services that you are offering, the more you're going to have to tax. Because at some point, you can't just keep running up the deficit. Yesterday, before the market closed, they're still working on the second stimulus bill, or the next stimulus bill, to help eliminate some of the burden of COVID. There were the two parties to the negotiations were well off. One was at $1.6 trillion with additional spending outside the normal budget, and the other one at $2.2 trillion. and they could not come to agreement. So before the markets went out yesterday, the president announced that negotiations were halted on any stimulus until after the election. And you saw an immediate market response. It was a negative response. Now, today there was new tweets, like there always are. Now it says, send me one that gives everybody $1,200 a piece. I'll sign it. Send me one that covers the airlines to prevent the furloughs of all the airline workers, the hospitality workers. I'll sign it. Send me one with payroll protection. I'll sign it, but only as clean bills. Market responded as positive. So when we look at the taxes, yeah, there's a lot of things going on. I think there have been some studies that with the first stimulus package, a lot of the people just paid off existing debt. Now, Walmart, they saw a bump because a lot of people went to Walmart and got a new 72 or 100-inch TV. But a lot of the people, the majority of the people paid off existing debts, like their credit cards or their mortgages or their car loans, etc. So when we look at the policies now, especially with the COVID, would it help individuals? Would it help stimulate the economy to get $1,200 per person out there, or $2,400 per couple? Yes, but it's not going to be a long-term fix. The long-term fix has to come with the businesses getting back to work. That's the big issue now, is how can we get back to work safely? How close are we to a vaccine? How close are we to having the drugs available, not as preventive care, but to help individuals that already have it? So we're kind of in the middle on that, but either way, that 1.6 or 2.2 billion or whatever, a trillion, whatever they come up with, will be added to our deficit. Let me see if I can do I'll pull up some graphs. Now, there's our income, poverty in the United States, and there's our income. You can see it over a period of time, it's going upward. This is by race. Is the gap closed? No. Is it closing? It's hard to tell. It's really hard to tell. I don't see a lot of movement, but this was up to 2017, I believe. I'd like to see it a little further along. Okay, what I want to find, you can go to census. I want to find graph showing the historical tax rate in government revenues. Hopefully they can show us a nice little graph. Now this goes just from 1958. And I don't like their graphs. In the 1920s and 30s, we saw an upper tax rate around 90%. Okay. The other way. If we go back, give a second to catch up. We can go back to the 1900s. Right now, I think we have 6 or 7 tax brackets. Let's look at this one from 1977. The number of tax brackets, and you made over $200,000. Anything above that was taxed at 70%. It wasn't until the 1960s that the upper tax rate was reduced. But when we talk about taxes, I want you to understand the evolution of taxes. I'm going to go down to the very bottom. I don't want to subscribe or anything. It didn't like going full screen, so okay, it doesn't want. All right, this is go to page 65. In 1916, there are tax brackets. You see between 16 and 17, the taxes on the wealthy went from 17% to 67, then to 77. But they were more precise on their different intervals. So between 1.429261 million and 2,459,670, you were 58%. That's a very small group. It's only a difference of about $400. But that is a bracket by itself. We go into period World War II and in World War II, you can see the tax rates are ticking upward. The number of tax brackets, can you imagine doing your own taxes with 30 and 40 tax rates? We see a reduction in around 2024, but then we start seeing an increase. It's 26. It's assumed that all the costs of the war are paid off. And looking at the roaring 20s, there's a lot of money coming in. But 32, it's going to get all the way up to 90%. There's 80. One, 88. So can you imagine if you're an individual and this amount of money is probably equal to a couple of $1 billion now a year. But if you had to pay 88% of your income to the federal government for taxes, a lot of your incentive goes away to do anything. It went up to 94. And it wasn't until Kennedy came along and he reduced some of the taxes, allowing a lot of individuals to start investing. You know, we look at 653. So it won't be until the 60s we saw the tax rate start going down. So if we look at this, only goes to 2013, but there's a big difference between 35% upper and 92% upper. So we see this changing constantly, and when we listen to debates, we need to look at and listen to exactly what their objectives are as far as taxation. And if we believe that more taxes are needed to overcome the burdens we're seeing in front of us now with COVID, vote for who you think is going to fix it. But all I do say is vote. It doesn't matter who it is. You can't complain unless you vote. Well, you can still complain free speech, but I'm not going to listen to get into a big discussion about it unless I feel the other person is doing their job and voting. Okay. Now, any questions about Chapter 12? I'm also going to include to a story. We may have talked about it before. The tax system explained in beer, Barstool Economics. So that's going to be available because this is a time in which it will be discussed. Okay. Any questions? C2. For the peer review, since the paper does not need to be finalized, we need to have the sources already. I would think you would already have the sources, but I don't want to see them. Now, if I look at the first page, well, really, you haven't got it to the meat of paper. So all I'm seeing is the introduction, the thesis statement, and the beginning of the argument or the presentation of data or analysis, either quantitative or qualitative. If I see an unusual topic and I see an unusual direction, I may send you a note asking where your sources at, or just give me a link to where I can go and do some reading. But that doesn't happen a lot, and it's not a great penalty if I do it. It's just that I want to be aware of what's wrong with the paper and what to expect when the final paper arrives. Because I'm going to have a lot of papers I'm dealing with. As soon as you start submitting in week 14, it takes a while to get them graded. And if I have to go start digging into sources and materials it slows everything down. Most of the topics I've already seen before in some format, maybe not exactly the same argument, but I've seen them. And I don't have to go look at the sources. I know what they do, what they say. I would advise you to stay away from blogs, editorials, because you're looking at stuff that's more opinion based. It's not evidence based. It's how that person felt when they woke up in the morning, whether they liked or disliked something. So I want reliable sources. Wikipedia, I don't like it as a source for the simple reason I can go change it. And for one, it may show the changes I put in there. I can say George Washington, the father of our country, died yesterday. Somebody's going to correct it, but if somebody goes in there and reads it while it's there, it's not good. I don't want anybody to take that as a source. Now, I do say that Wikipedia is a good place to start because they do have individuals that are sourcing relevant data or germane materials about any of the topics. So I even use that. Yeah, I'll go to Wiki and then I'll look at all the source materials at the bottom and select those, and it can help out tremendously. Okay, but I don't need 99.9% of the times I do not need to source information. If I do, I'll ask, and I'll ask privately for. Any other questions? I would advise you to look at the materials that are available. Look at your grades. Look at your thesis and outline. Make sure you got credit for that. Because if you didn't, I need to go back and fix it. But when the peer review board opens up there, you can get your paper in there, or your first page, the better. Okay. I don't want them all showing up on the 15th. I can't stop you from doing that, but I want you to have time to look at the critiques, make changes if necessary, and prepare to submit the paper on the 14th. Okay? Any questions? Nobody. You don't have any questions, Gerald? Ethan?
Today.
Okay. All right. Well, we're a little after 12. I'm going to stick around 12:15, and I'm going to start opening up the different materials for you for next week. So if you don't have any questions, you can have a nice day. And just keep in mind, you got to get your work done to get credit. Once it closes, you get a 0. All right? Have a nice day.